Hey everybody, and welcome back to my channel. I've had an interesting week this week. I started the week thinking that I wasn't actually going to trade in my funded account with the 5%ers. Due to the fact that I had quite an emotional week last week, I was wanting to take it steady. In fact, I traded quite a lot this week and I was up 0.5% on my account at one point, which was brilliant, but unfortunately I gave back a little bit of those profits. But I'm still finishing up green on the week with a very small profit of 0.12%. But green is better than red, and I'm going to break down my trades with you in just a moment. So I feel like I've learned quite a lot this week, which has been really quite interesting. Although I feel like the focus should be on making money or making profit in my funded account, I'm actually quite happy just making progress in my learning journey from trading. So how do I start? If you guys have been following my journey, you'll know that primarily I like to scalp using the 5-minute time frame. Now, since I've started trading with the 5%ers, I had some issues with the leverage available on that account, which meant that I gravitated towards a strategy that I wasn't as proficient in, which uses the larger time frames, the 4-hour and the 1-hour time frame. Now, this week, I've kind of changed things around a little bit, and I've decided that actually I'm going to scalp my funded account because that is a strategy that I like to do. And what I've been doing has not been working. I feel like I've been spreading myself too thin by trying to do different strategies when in fact I really need to bring it together. I feel like I need to get focused and I need to just do one strategy, keep it simple and take away a lot of the distraction. And at the beginning, I thought that I wasn't able to trade scalping in the 5%ers account due to the buying power because I felt that it wouldn't be worth it. I wouldn't be able to make enough money because I would be using such a small position size. Whereas in fact, I've kind of realised that I can use that in the 5%ers and I can use a smaller position size. It just means that I'll be managing my risk better, but that I need to focus on how to make the winners really count. And that's what I've been learning a bit more about this week. I've been playing around with the idea of taking multiple positions when I trade, and I'm selling off part of my trade at one profit target and I am holding another one and really trying to extend those winning trades so that the losing trades don't matter as much. Now that all sounds great, but that's not actually what happened this week. What happened was that I got into a beautiful trade and I thought that it had potential to run, but I got out at my normal profit target and it carried on running and I realised that I could have got so much more. But that's how you learn, right guys? And I'm just happy to be green at the end of this learning week. So I'm going to dive onto the charts with you and share with you my winning trade on EURCAD. The euro has been really weak this week and I went short quite a few times on it, in particular against the Canadian dollar, which has been quite strong. I'll show you in more detail. So just before I load up the chart for EURCAD, just sharing with you here my account history on my broker with the 5%ers. So you can see all my trades that I took this week here. I didn't trade Monday and I haven't traded Friday because Friday I find tends to be quite a choppy day and I was just being cautious on Monday. As I said before, I wasn't even sure I was going to trade this week at all, so I've certainly traded a lot more than I intended to this week. Tuesday, Wednesday were really nice green days, and as I said, I was up 0.5% on my account, but then I took a few losing trades on Thursday, brought that back down unfortunately, but it happens, and the losing trades, they just didn't work, and I'm being okay with that because it happens, losing happens, and as long as you're green, that's all that matters. So I'm quite happy with my very small profit at the end of the week. So here is the trade that I took on EURCAD, and I've used the backtesting tool in TradingView to go back in time. So I've removed the present chart data and I've gone back to Tuesday. This is the 4-hourly chart, and here we can see the final closing candle for 5 o'clock in the morning. So this would be around about 9 o'clock on Tuesday morning. And what I was interested in was that we've been in this really nice downtrend on EURCAD, and I actually used the fib tool just to try to see where price action might come back to retrace before moving lower down. And I was interested because price action had come back to the 0.61 fib level, which for me on the 4-hourly chart has proved to be quite effective. Now I wasn't too sure because there's been a lot of choppiness in the market. I feel like a lot of strong trends have been coming to an end and have been ranging, and I didn't want to just get into this hoping that the trend would continue and get stuck in a range. So I decided to wait until the 4-hour candle closed to just give me some kind of indication as to where the market's going. And as you can see, the 4-hour candle here closed really nice and bearish. We had a red engulfing candle. So I didn't think this was going to just drop and continue going down, but I certainly thought we'd get some sort of reaction and pullback, which is what I was looking to trade. Now, once I had this larger time frame perspective of the market, I then dropped down onto the 5-minute time frame. So looking here at the 5-minute time frame for Tuesday morning, just after that 4-hourly candle close, and I was just waiting to see what happened. So as you can see, in the shorter time frame perspective, we'd had this really nice uptrend here. This is the 0.61 fib level, and we had this little bounce back here, and we seem to be coming back up to this level. So I was waiting, because if we broke this level, I felt that it was going to look quite bullish, but I thought that if we tried to break it and failed, that would be a really nice entry point for a double top to get into this short. So I actually planned this trade to get short below this candle here. Now, as I was watching and waiting for this and planning my trade using this forecasting tool, I zoomed out on the 5-minute time frame so that the candles are really small, just to see the overall structure and behavior of the market. Now, as I was looking here, because we had this really big move up, I felt that if we could get past this potential resistance level here, that there may be room to really move down to retest these levels down here around about 1.4864. which was around about 100 pips from where I was looking to get into the market. Now, I had this thought before I got into this trade, and I considered the option of letting my winner run. Price action came to retest those highs, and then it came back down again, and that activated my sell stop that I had below this level. And price came down really nicely, hitting my 2R targets, which resulted in a really nice win on this trade. Let's see what happens to this pair. So this was a big lesson for me this week. Yes, I managed to get a winning trade, and yeah, that felt good. But when I saw that price did what I thought it may do, and I didn't actually get a piece of that pie, I was a little bit disappointed. But to be honest, I was more happy that I was right about the forecast. If I'd taken multiple positions on this trade, I could have set one of my targets to my original 2R to capture some nice profits, but the other trade I could have let run until that next potential resistance level. This could have been a 5R win, which for half of the position size would have been 2.5R, an extra 1.5R than I would have done if I had just left it at my original target at 2R. Now, I know this is a little bit confusing and I'm still getting my head around it as well, but that's what I've been learning about this week, is the way to effectively let runners run, but whilst also capturing profit and managing risk. And I think it's obviously going to take some time, as with trading, it takes time to build these skills, but I'm quite enjoying exploring this idea, because if I can really maximize my wins, then it's going to really help me to get away from that max drawdown rate on the 5%ers, and hopefully if I trust that process and allow it to run, I'll start getting back into the green. Meanwhile, March isn't looking too bad. I am currently down, but only by a very small amount on my account, because I had quite a bad week last week. If you saw my recap, you'll probably know what I'm talking about. But I've managed to just take it steady this week. I could have made a lot more. In fact, if I had not traded on Thursday, I would be up now on March. But it is what it is, and we don't know when the losing trades are going to happen. We just have to show up to the markets. So I'm going to have a break this weekend and probably take it a little bit more cautiously next week, as it will be the last week of March. I can't believe how quick that's come around. I hope you guys have had a great week. If you've enjoyed this video, be sure to hit the like button, and don't forget to subscribe if you're not already part of the channel. And I'll catch you in my next video. Thank you guys. Bye.